All right. Well, let me just start off by welcoming everyone to today's Title Topics webinar. This is ALTA's free 30-minute presentation that we've been offering each month to communicate important information to our members. I'm Jeremy Yowie. I am ALTA's Director of Communications, and joining me today is Jonathan Yasko of Entrust Solutions, which specializes in escrow and trust accounting for title companies, law firms, and underwriters. Jonathan, thanks for joining us today.
Oh, thank you very much for having me. I appreciate it.
And as you can see on the slide, today's webinar is titled Fraud and Your Escrow/Trust Account. And this is a timely discussion as there's a big push to reduce settlement risk. Additionally, regulators have increased demand are increasing demand to protect consumers and forcing lenders to adjust relationships with their service providers, and lenders are becoming more sensitive to the types of companies they're doing business with, thus putting a greater burden on title agents, attorneys, settlement agents. So today, Jonathan will be providing some useful information on what you can do to not only, one, protect your customers, but two, protect your company from potential fraud. And just real quick before we get into today's discussion, just a few housekeeping items. All participants are in listen-only mode. If at any time you have a question, please use the chat box in the lower right-hand corner of your screen to submit a question, and we will try to address questions at the end. And as an added benefit, today's presentation is being recorded, and it will be available for download hopefully early next week, and you will be able to find this at alta.org/title topics, and again the web address is alta.org/title topics. And with that, Jonathan, I'll turn the presentation over to you.
Well, thank you very much, Jeremy, and thank you to ALTA for allowing us to help everyone understand what's going on right now. My name is Jonathan Yasko. I am from Entrust, and I appreciate you all coming on board to listen to me talk for the next 25 or 30 minutes to go over kind of what's going on in the industry, talk a little bit about what underwriters see, what independent agents and attorneys see, also same thing about lenders and nationally what's going on. Before I would begin, I was asked to give a little bit of background about myself. So I'm going to make this very quick because I don't think anybody wants to see my ugly mug for very long. But I'll give you a little bit of background about myself. I started off on the agency side. I worked for an independent agent working in the Orlando area. After that, went for two different law firms in Florida focusing on bankruptcy and real estate and foreclosure defense work. I then moved on to Attorney's Title Insurance Fund, where I helped, along with a couple others, to start the audit program. And then I moved on to Southern Title, which was another title insurance underwriter. Then after Southern Title, I'm sure most are aware that Southern Title had a large defalcation from an agency that was canceled 3 years prior. Went out and started Entrust Solutions, which is a title insurance servicing company. So enough of that. Let's get started. I'm clicking the button here, and it's trying to go. Okay. I think everybody kind of understands that crooks want money. There really is no way around it. Crooks love money, love stealing money. They don't want to work for money. They want to go after your hard-earned money. So it's no surprise that criminals know what is in your escrow and trust account. Obviously, our industry, the title insurance and settlement industry, is a different industry where you have all these strangers that come together to exchange property and a large sum of money from which you may never see again. So when this money is pooled together and goes into these escrow and these trust accounts, the money can gather speed relatively quickly. So criminals know come the end of the month that you're going to have a higher level of money in that account than what you would normally would. So that is the time that most criminals want to strike, is at the end of the month. Now, there's all different types of fraud schemes that are going around. Obviously, the check fraud scheme has been around for a long time, where they get your information and write checks and kite checks. For a long time in South Florida, there was a check fraud scheme based out of the South Florida area, where they would go around and they would call title agencies of saying, hey, I've got this check and I need to go ahead and cash. Can I verify this? They would take that information, go down to the bank, and they would duplicate the checks, and they would go down to different types of grocery stores to cash the checks and so forth. So it really started off from that and moving on to different types of more complex schemes. Everybody here that's on the call has associated with a trust or an escrow account in some way. The easiest way to steal money is by wiring instructions. It's very simple. I can take right now anybody's information, go and initiate a wire on someone's escrow and trust account by an ACH debit. It's really simple to do. But people started catching on with that. And the fraud schemes from there got even more complex. And that's the part I'm going to talk to you now about, a Canadian fraud scheme. Now, it's called a Canadian fraud scheme, but that's really doesn't matter if it's coming from Canada or not. There just happens to be a big influx of this happening. But I'll give you this scenario. And this happened in several different states of which that I was a part of that I helped stop. A well-known, reputable realtor would contact their favorite agent or attorney and say, I've got a person who wants to buy a piece of property, and they're from out of the country, and they've notified that this is the piece that they want. And from a title agency, you know this attorney, you know this realtor, you know who they are, you know where they've come from, they've been around for a long time, you've done business with them. So this is a reputable deal. So in some cases, the title agent would actually be in contact with the borrower via phone, say, hey, this is such and such from the borrower for the realtor, and I'd like to go and buy this piece of property, and I was told that you guys will be my settlement agent. And they would start the negotiation process. Well, tell me what your fees are. Tell me what this is. Tell me what that is. And they'd say, okay, well, I'm going to FedEx to you a cashier's check for an earnest money deposit because I've identified the property that I want to buy. So as the money comes in, it's a real legitimate FedEx envelope. It looks to be a real legitimate cashier's check. So the agent go ahead and deposits the cashier's check into the account. And usually it's for a cash deal. So in some cases, it can be $100,000. So as they put the cashier's check, of course, it's drawn on a Canadian bank, and they deposit the money. And, of course, sometimes the bank will give you real good funds to go ahead and disperse. Well, the next day, the borrower who was going to purchase that property says, look, I've identified another piece of property, and I want to go ahead and transfer my sale to another title company, but I want you to go ahead and send the money back to me. But this time, I want you to wire the money directly to me. So in a lot of cases, people would wire the money. Now, what happens with that? The money that's coming on a cashier's check that the bank has given you credit for is not necessarily good funds, but the bank has given you credit for that. Once you wire the money directly out of your bank account, that money is gone. So as this crime kept perpetuating over and over again in different instances, we notified our agents and said, hey, listen, if you happen to get somebody who's purchasing a piece of property out of town and they send you a large earnest money deposit for a cashier's check, that should be your initial clue that something's wrong. Wire your funds always. So because if you wire the money out of your bank account and the bank denies you credit for that cashier's check that was bogus, that money's no good. Now that money is gone and you have no way of getting it back. So it's extremely important that you take the time to make sure the funds are in your account. The days of accepting cashier's checks as real good funds is behind us. Wire as much as you possibly can. Even though there's a wire fee associated to it, I'd much rather pay a $10 or $15 wire fee than I would for $100,000 that has left my bank account. If it's too good to be true, more than likely it is. So this crime has been going around for a little while now, and it sort of leads on to a couple new crimes. The big one now, which I'm sure most of you have seen commercials for, I believe Bank of America has it and a few other large banks, has the ability to use your phone to capture a check with the routing information and the details of the account information and the amount to debit a check. And last year, the crime started getting big, and especially, again, down in Florida, and that is where I am from, so I'm I'm well aware of the fraud and crime that happens in the state of Florida. We like to be first in a lot of things, football, basketball, as well as crime. So they utilized the smartphone app for an interesting piece. They would take a photograph of the check, and in this particular case, it was a husband and wife. They sold their property. They had their seller's proceeds check. They walked out with the seller's proceeds check. They took a picture, and the bank automatically deposited the information directly into their bank account. They then went back into the title agency and said, hey, listen, instead of the check, I'm going to give this back to you. Can you wire the money directly to my account? Well, since they just walked out and walked back in, sure, why not? We're here to service the industry and utilize it, and service you guys as our customers. So they went ahead and wired the money directly to their account. So in this particular instance, not only did they get the money from the check, they also got the money from the wiring of the bank account. So you have to be really smart when it comes to a smartphone application for depositing funds. Again, utilize your bank. Positive Pay is a great piece that you can use from there to help prevent that from happening. But you also want to have the ability to monitor what's going inside and out of your account. As we progress in this technology age, more and more applications will come out to make lives easier, and of course will also make lives of title and settlement agents more difficult. Banks are becoming aware of what's going on. This happens to be a publication that I got from SunTrust a little while back, where banks are aware of the different scams that are going on. Obviously, counterfeit checks and scams, they try to put out publications as much as they can. Banks understand crime and fraud is going to happen. So be aware that your banks are aware, and you guys can work together. A banking relationship with whomever your bank is a relationship. The bottom line is they need you and you need them. So if you have a mutual understanding and a mutual goal to work together to help protect yourself and protect the bank, it's only going to benefit you. But speaking of banks are not always right. And I believe there's probably a couple bankers that are on this phone call, and I'm not trying to pick fights or anything like that. And I'm sure there's a couple people who we bank with that are on this and seeing this now. But I am here to tell you that the banks are not always right. I'll take the hate mail later on. That's fine. But if you think your bank loves you, think again. What do banks love? Money. What happens with you as a real estate and title agent? You have an escrow account. So all that money goes into the account. So you get associated and charged different fees for having your bank account there. Now, I think banks are becoming smarter in a sense that they are not going to start, they're reducing their amount of fees for their analysis fees and the charging of the wires because they realize they need you as a customer. But what most people don't understand is that banks don't necessarily make money off of that. The money in your bank account is actually an other current liability. So although your money in your bank is not an asset, what the bank does to generate assets is they utilize the money and they have the ability to loan against it. For every dollar you have in your escrow account or your bank account, the bank can loan against it 7 times to create assets. So really get to know your bank. If they're charging your fees, I'm here to tell you there's a lot of banks out there that don't. So really shop around with the banks that you do business with. As we sit here and we talk about different things, I want to talk about Check 21. Now, I could literally spend all day talking to you about Check 21, tell you how it works, all the rules and regulations required with Check 21, but obviously there's not enough time for it. So we're going to kind of breeze over the 30,000-foot view. But Check 21 was designed to process checks at a faster pace. These checks fly through these machines at 300 miles an hour. They're trying to get down so there's no human interaction. I'd be willing to bet that most of you open your bank statement each month and you see your bank statement and you see checks that clear your account. They don't have the proper check numbers. It's because the checks are going through there so fast, sometimes it doesn't capture all the information. But so Check 21 was designed initially to eliminate the float. Now, what does that mean? When you deposit money in your bank account and you write a check and you go present your check, well, the check has to then go to the centralized clearinghouse. So it does take time for checks to clear. Now, in some cases, I know I did this sometimes earlier in life where I wrote a check the day before and put it in the mail and I got deposited next day from payroll to cover the check. Well, that's what Check 21 is designed to eliminate, is that whole floating. They want checks to clear and clear at a fast pace. So this can be sometimes if the person writes a check, let's say, for example, I bank with Bank of America, and the person who I'm writing a check to banks at Bank of America, if I issued them a check, sometimes that check can be debited from my account within hours of the deposit. Perfect example of that is when I pay check for daycare. Happens to be they bank at the same bank. So I literally write a check, and I see the money gone within a couple hours. I guess I'll start paying them with something else. But which moves us on to another rule, which is called the Expedited Funds Availability Act. And to flip it around a little bit, this is about depositing money into your bank account. And there's all different types of holds and exceptions that banks can put on deposits before they can be considered as good funds. Again, this is another topic of which we can talk many, many, many hours about. But keep in mind, a bank has the ability, not necessarily would do this every time, but they have the ability to hold certain deposits up to 21 days, depending upon some different limits and availability. So again, you could have a deposit that you may not have up to 21 days, and you just cut a check that could be hours within it clears your account. So again, as we have these large escrow and trust accounts, keep in mind that just because you have a deposit, you write a check, there still could be problems with that. Know your bank statement. Every single bank statement, every single bank is required to put on there the UCC regs. And this is Regulation E. If you flip over, usually it's the first page, the back side of the first page, or it's on the last page, there's some real important information about bank deposit accounts. And the bank deposit accounts I highlighted here in yellow, and I'm sure it's difficult to read on most monitors, but I encourage you to go to your bank statement, flip it over, and look at what they're telling you that you have to get with information about them in case you have fraud. For example, there was a situation that happened in Tennessee where a person got a hold of wire information and took money out of the bank account. That agent notified the bank within an hour. And under the regs, the bank has to put the money back in until they figure out what technically happened. So again, look at the back of your bank statement. It's either going to be on the back of the first page or on the last page, and look at what information has regarding deposit on accounts. For the most part, you usually have 30 days. Some banks gave 60 days. I see banks now that sometimes have 14 days of when you could present it's got problems. Again, when those checks run through those machines at 300 miles an hour, I've seen checks that were written for $1,000 that clear as $10,000. So be very aware of what's going on with your bank account. Talk about the economy real quick. I think everybody here understands that the last several years, the real estate has gone through some real difficult times. And so the economy has taken a toll on the industry. ALTA released figures that there were 91 title insurance underwriters in the year 2008. By the time June 2010, there were 54. In that time frame, in 2008, Land America was a large underwriter with several different, was an umbrella company with a lot of different underwriters under their umbrella that they closed their doors. In 2009, the company I used to work for, Attorney's Title, they had the same large defalcation that shut them down. So the economy is definitely taking its toll on the industry. Were things going hot and heavy and people getting signed up that shouldn't have been? Absolutely. I do also believe in a positive aspect that these last few years has also been sort of a cleansing of the industry. There were a lot of bad players and a lot of bad apples that got out of the industry. And I think in some cases, unfortunately, there were some good people that got affected by this, myself being one of them, which brings me up to 2011. In 2011, the title industry was sort of flatlining a little bit, and not in a sense where flatlining as dying, but flatlining as it wasn't. And having said that, in 2011, revenues started to flat a little bit. Some companies were making money. However, there were two title insurance underwriters in 2011 that got shut down due to defalcations, one of which was New Jersey Title. They were part of the $47 million title serve defalcation. The other one was Southern Title, which was shut down by an $18.5 million defalcation from an agency canceled in 2008. So what happens with this? Well, underwriters are having to make some decisions in regards to industry actions. Now, I know there's a lot of different people in different states. Some states are regulated by their splits, some are negotiated. But people, the agents or the underwriters are now looking at making decisions on minimums and splits. So actions have to be taken. Doesn't matter what the size is. Underwriters are now continuing to increase their minimums. If you want to do business with XYZ underwriter, their minimums are looking to go up. Audits, you're going to be audited a lot more. There is a cost of having an agency on board with an underwriter. I know I'm coming from the agency side and the underwriter side, and I'm here to tell you that there is a cost associated with doing it, And unfortunately, that's sort of the position that we're in. This is a relationship business. This is an industry that prides itself on relationship and building businesses. But it's sort of getting down to other people are now seeing a weakness with this, and a lot of talk has been made recently about agent vetting. And agent vetting is something that I have had a little bit of issue with coming from the underwriter side because it's telling that the underwriters are not doing a good job of vetting their agents, and I don't necessarily agree with it. That's my 2 cents. I'm not associated with an underwriter, so I'm here to tell you that it's setting, at least to me, to tell us that we were not doing a good job. So there's other things agencies can do to maintain a relationship. Work with your underwriter. It's a two-way street. You can help them build from there and understand that they need you and you need them. Here we go. So new initiatives. What are underwriters' new initiatives? They must keep the industry going, bottom line. Reconciliations is a big hot topic right now. In Florida statute requires all Florida agents to submit their reconciliations to all underwriters on a monthly basis. I think it needs to be for everybody. Require outsourcing of reconciliations. Again, it's not a bad idea to have a third party take a look at it, second set of eyes to help them out. Remittance of policies no later than 60 days. This is a commonality. This is in most agency and underwriters agreements and contracts where they want policy remittance in 60 days. And it's good that you remit in 60 days because you're trying to get the policy done out the door so you can work on the next deal. At the same time, the underwriter needs the revenue to survive. So again, it's reciprocal relationship. How much they can help you, they can help us. You can help you guys. Centralized dispersing. Lenders are starting to become a little bit fearful of sending money to independent agents based upon the ability to pay off loans. So there's been a lot of talk about centralized dispersing. Can the underwriters do it? Can a third party do it? And, of course, that also kind of goes in line with awaiting the final CFPB rule. There's a lot of discussions going on with the Consumer Financial Protection Bureau. And just for your all's knowledge, this is now the second largest bureau underneath the Department of Homeland Security. So it is a huge, they have an enormous amount of powers to help or change the marketplace. So I encourage you to get involved with what's going on with the CFPB. So what can you do to protect yourself? Number one, utilize a good closing and reconciliation software system. Obviously, if you have a software system, and there's many of them out there, make sure it can do both for not only to produce the HUD and your closing documents, but also to cut checks and reconcile. Reconcile your account in a timely manner. 15th of the month, you should be done with the previous month's reconciliations. You should be completed. And why is that? Going back to the bank statement that you flipped over, you have 30 days typically to tell the bank that there has been problems or fraud in your bank account. And ladies and gentlemen, it's not 30 days from the date that you receive your bank statement. It's 30 days from the ending date of the previous month. So when that month closes out, you may not get your bank statement until the 6th or 7th of the month. And let me tell you, those 6 or 7 days are part of that 30 days. So the clock is ticking. So use your reconciliation as a guide. It's the best tool for your business. Look at your trial balance. Your trial balance breaks down how much money you have in each file, either over or short. Review it daily for file shortages, or if you have a file overage greater than 6 months, why do you have a shortage? Why do you have a file overage? Look at your outstanding deposits and wires report. You should not have a deposit greater than 3 days old. If you do, that's even though it's a positive value on your reconciliation, it's still a shortage. If you have $1,000 due to you from the realtor that you have not received, you need to get that money into your account. Even though the file may have a zero balance on the trial balance, it's still short that money. Outstanding checks and wires. Look to see if you have any types of mortgage payouts or any type of lienable items. You want to make sure you don't have any recording checks outstanding or tax checks that can cause claims. And again, bank statements. Look for any unusual transactions. Is there problems with somebody taking money out of your account? If you guys have not initiated ACH block on your escrow or trust account, please do that. It should, for the most part, hopefully be a free service because the bank, no one should ever ACH debit your escrow account, ever. Positive pay. Now, there's really three versions of positive pay. You have the basic version of positive pay where the bank presents you information of which you have to accept or decline by a certain time frame. Usually it's 12 o'clock. If you don't give them any information, they just assume that all the checks are good. Then you have the basic version of positive pay, which gives information, which gives detail to the bank. It's electronic submittance of information from your software to the bank that talks about the check number, the amount, and the date. Well, what's the problem with that? The problem is there's no payee name. So now banks have the third version, which is called payee name recognition positive pay. And the payee name recognition positive pay brings that aspect into it where the person's name inside that information so it can clear properly. That's the best tool for you to help prevent check fraud. If you're an attorney, strongly recommend maintaining a separate real estate trust account. Auditing will now start happening over and over again, and if you have real estate and non-real estate matters commingled together, I'm here to tell you that the underwriters are going to want to look at that trust account. So keep a separate real estate trust account. Also, segregate duties. You want to limit access who can make deposits, who can disperse checks, and who reconciles the account. Require dual signature. If you have the ability to have dual signatures, that's great. You know, it's a second set of eyes to make sure everything's proper. Keep checks locked up overnight. This is a big problem. I've audited many agents, and I always see checks laying on the desk or laying on the floor that's blank check stock. People steal blank check stock, and that's how they do fraudulent checks. Keep good accounting records. If you have deposit books, use them. Make copies of dispersed checks. Maintain wire confirmations in respect of closing files. Very important, this last bullet point here, conduct terrorist name searches as required by the Department of Homeland Security. For ALTA members, you can go on their website and search names on their terrorist name search list. Most underwriters have this ability, but you want to show in your system, in your closing file, that you did search these people's information for the Department of Homeland Security. Here's some tracking procedures and additional follow-up. Keep files stored in separate areas. You know, put your files waiting for recording separate from the files waiting for policy or waiting for satisfactions or files and balances and close. Utilize escrow and trust account reconciliation as your guide. Again, it's a great tool, your reconciliations. Don't just do it because you think you have to do it. Do it because this is a tool to tell you how the life of your business is actually processing. If you want to see who still needs to issue policies, if you need to see are your closers doing what they're supposed to be doing, it's a great tool. If you're voiding checks, cut out the signature line of the checks. Make sure you write void on them, and void them in the system too. Just because you write void on the check doesn't necessarily mean that your software system knows that it's a voided check. Organize your files in a consistent manner, and this is a big audit thing just from my side, is keep your financial information on the left and title information on the right side of the file. It's always good to look at files with the same type of information in each file. Some tracking procedures and additional follow-up. You may want to post deposits and disbursements and print a ledger card before dispersing just to make sure all funds have been received. A lot of times a file may not have a zero balance when you go and cut checks. Really look at your software system. Disperse your underwriter premiums separately for each file and utilize that outstanding check as a tracker for stale policies. Now, I know a lot of times people don't necessarily do it, but think about each individual file. Each individual real estate transaction is unique, so you want to make sure that you're cutting a check for that unique real estate transaction when you pay that policy. Plus, it's a good way to know if your people who are producing your policies, your in-house post-closers, are they doing what they're supposed to be doing. Look at wire logs. You know, utilize a wire log to write down the information of the date, the amount, and the file, and who sent it and where it came from. You also really want to limit access to who can send bank wire transfers. That's extremely important. You need to keep that extremely limited or segregate it. In our office, we have one person that can initiate, and we have another person who has to approve. Zero balance accounts. Now, I highlighted this because it is important. Not every bank has what's called a zero balance account. Some people think they have a zero balance account, but in essence, it's a sweep account. A zero balance account is an account number but it's a pass-through account. So when you give out your wiring instructions to anybody on the street, what do those wiring instructions have? The account number and the routing number. Well, if you have a zero balance account, that's exactly what it is. So you can give out your zero balance account routing number, and that money will go directly through the zero balance account. It won't stop, and will go down directly to your escrow account, which you'll be doing the dispersing. So this way, no one can call just to get your wiring instructions and take money out of your account through an ACH debit. Now, usually if I'm in a room of people, I have everybody raise their hand for this question, but since the lines are muted, you want to back up your computer system often. I usually ask everybody, how many people here are on a server? And everyone would raise their hand. And I said, okay, keep your hands up. Of you, how many of you back up your software? Some of the hands would go down. And then the final question was, okay, for you to actually back up your server, how many of you actually test your server? Test the information for the backup. A backup is only as good as the information that's on it. So take a look at your backup. Make sure you're actually getting proper information out of it. I know I'm going a couple minutes over, Jeremy, but this is a little time right now if anybody would like to ask any questions, or Jeremy, you can go ahead and from there.
Hey, Jonathan, no problem. We can run over. Fraud's a big issue right now, and if we go over a few minutes, no heads are going to be rolling. just real quick, we had a cap on the amount of people who could access the webinar, and we blew past that. Unfortunately, midway through, we were able to expand it. Additional people could get in. If you were one of those people who didn't get on at first, as I mentioned earlier, the entire presentation will be available for download early next week, and you'll be able to have the audio, the video, and the presentation all at once. So, Jonathan, let's go ahead and get to some questions that popped in to the queue, and if anyone else has any more, please use the chat box on the lower right-hand portion of your screen. Linda Carlo asked about ACH transactions. She said that Bank of America says they can't block their escrow account for ACH transactions. Any suggestions, Jonathan?
That's surprising to me. Bank of America is almost the largest bank. I do know that they have an ACH block. It could be the person that you're speaking with may not quite understand about what an ACH debit on an escrow account means. You may want to contact the person above them, or again, I would be more than happy to talk to them as well, because they can put an ACH block on the escrow account. They should, especially Bank of America. I'm almost 100% positive. I've spoken with a Bank of America person in the past, so if you need help with that, I'd be glad to assist you with that.
All right, great. And also, Jonathan's contact information is right there on the screen, so please feel free to follow up with him. Another question was about ACH. How do you prevent people from doing an ACH into your account?
Well, that's when the ACH block comes up. Again, is an ACH, just for people who don't quite understand what an ACH debit is. I'm going to use an example here. If you go sometimes into Walmart or Sam's Club or what have you, and I guess not Sam's Club's not a good example, but use like Walmart or Target. If you write a check, you'll see them sometimes run that check through a machine, and they hand you the check back to you. Well, what happens is they take the information off your account and routing number and the amount of the check, and they they actually auto-debit your account. And that's exactly what an ACH debit is where they're auto-debiting an account with specific information, with the account number and the routing number. So if you can contact the bank and say, this is an escrow account, these are third-party funds, I'm the fiduciary involved, they have the ability to put an ACH block to stop the people auto-debiting out from an account. Same thing goes too with and that's one of the reasons why for zero balance accounts, some banks couldn't do it initially years ago. But again, it's the same way. You're trying to prevent money from being taken out of a person's escrow account. You're trying to prevent that type of fraud because it is somewhat easy to do.
All right. And question about from Les Martin asked about if there's a limit on smartphone application deposits?
I think it's limited. Well, that's a good question. I don't know if it's limited by dollar amount or limited by actually, I'm assuming as long as it has a check to take a photocopy of, because that's what it's doing. It's using the camera in the phone to take a picture of the check, and then it scans in the routing number and the account number and the amount. I would be willing to bet that there is probably not a limit unless it's, maybe for a 5-digit or higher deposit. But again, that's just something that I unfortunately don't know. I think every bank is going to be different.
Yeah. Okay. Could you touch on what the third? Julie Booth wanted to know the name of the third and most recommended positive pay that you touched on earlier.
Oh, it's called Payee Name Recognition Positive Pay. So there's all different types of positive pay. There's the basic form. There's the which is really reverse positive pay. Then you have regular positive pay, which is the date, the amount, and the check number. And then there's payee name, like a payee when you write on a check, payee name recognition positive pay, where it also gathers in the information directly from the payee's name on the check. And again, it's positive pay. Your module in your software will export the data directly to the bank, and the bank will accept the data from your software with that information. So even if somebody presents a check with the date, the amount, and the check number matching, the person's, you could draw a line through a person's name and write Jonathan Yasko above it, and the check will still cash. What this is designed to do is that the name would have to match the data for the check to be released.
Okay. We'll take a couple more questions, then we'll probably have to call it quits for the day. But Marianne Emden, Jonathan, wanted to know if you suggest any safeguards for accepting a cashier's check for borrowers' funds at closing.
Yeah, I would recommend not doing it at all. Wire. Cashier's checks, that's a great question. A lot of times, when closings take place, you don't necessarily know how much cash you have to bring to closing. Well, years ago it was don't accept personal checks above $500. Well, cashier's checks are an interesting animal where they used to be considered as good funds, but for most people that probably don't know this, a cashier's check you can actually go put a stop payment on. You could call it in that there's, that check has been lost. There's a lot of things that money may not get into your escrow account. So if you have a large cashier's check, I would recommend them go back to the bank and wire the funds directly to your bank account. Or if you do want to still accept cashier's check, do not accept a cashier's check above $500 or the amount of which you're comfortable that you could put money back into the escrow account personally if that check was to bounce.
All right. Jonathan, how about another question about, I guess not another question, but a question about zero balance account. Does the ACH block serve the same purpose? Is there a reason to have both?
Well, the zero balance account and the ACH block are two separate services. For banks that do not have the zero balance account capabilities, that's why you'd want to have an ACH block. If you have a zero balance account and you're still dispersing out of another escrow account, it's still wise to have an ACH block on the escrow account that you're doing the dispersing from. Again, a zero balance account is just a tool. It's not something that has to be utilized. In some cases, they may not even be available. But the ACH block, it should be an absolute definite for what you need to do.
All right. And then real quick, maybe yes or no. Does utilizing positive pay relieve the bank of any of their liability?
That is a good question. Positive pay. That's sort of that question can be drilled down, I'm sure, on many different levels, and it's
right.
Sort of an open-ended question. If a check is presented for positive pay and it is a fraudulent check, more than likely a person who dispersed the check internally is part of the scheme. having positive pay means that you have a zero balance. It's just it's just a tool to help prevent somebody write checks based upon your bank account or have similar checks matching your bank account. I'm not quite sure. I'll be the first to tell you I don't know the answer to that question, but I could always do some research and get back to it.
All right. Yeah, and again, any questions that we didn't address, if you're looking for maybe a little more information, chat with Jonathan about that, please give him a call. We also had a couple of questions, Jonathan, we're not going to discuss now, but questions about vetting companies. Obviously, it's gotten the attention of people in the industry, and just want to let everyone know that earlier this month, Alta released its title insurance and settlement company best practices, and these are to help members highlight the practices that the industry exercises to protect lenders and consumers. The practices address 7 main areas, ranging from controls regarding escrow and trust accounts to protecting customers' personal information and responding to consumer complaints. Alta's in the process of creating a standing committee to review and improve the best practices, and we'll be providing sample policies to members, and we will be having training and webinars on this in the future. For more information about the best practices, Michelle Korsmo, Alta CEO, sent out a special member alert a couple of weeks ago. We've had some articles about agent vetting in Title News Online and Title News, the magazine. It was the cover article in October. And so if you're looking for information, please go to ALTA's website, alta.org. I guess with that, that will bring us to the conclusion of today's presentation. Jonathan, thank you again for joining us. We had a great turnout, 120 plus.
That's great. No, I'm thrilled. I'm glad I could be a part of it, and hopefully help out the industry.
Okay, and as I mentioned, the presentation will be available for download, and you can find that at www.alta.org/title topics. It's also right on your screen still. So with that, I hope all the listeners found the webinar useful. Thank you, everyone.